What's happening now in the rise of a great power to challenging existing great power is the same sort of thing that's happened in the 1930 to 45 period. You just have to see it for what it is and deal with it well. Don't deal with it emotionally. Approach it like a chess game. If I make this move, it will have this implication. And so I think if it was clear, questions like, do you want to go to war? There are 4 types of wars brewing. There is a trade war, there's a technology war, there's a geopolitical war, and there might be a capital war. I've been to China for 35 years and I watch them, and we're operating in a world in which they are let's call it worthy opponent, that each country seeks to do what's in its own interest. And there's a battle over wealth and power, and that's internal or external. And each company, when they go there, forms their own view about what it's like. And then there's law. And so the way I view that comment or that assessment is that if the government is going to do something that will have an effect, they will have to create laws. And that those laws will determine what companies are going to do. They'll behave according to those laws. Otherwise, going to have individual companies make their own assessments. From my assessment of going to China and being there, it's not like the China that is being painted. It's not this communist, it is highly capitalist. The enterprise system is operating, meaning you go there and the innovation and the things are powerful, and that's why you're seeing so many issues with competition. Huawei is about competition, and their technologies are quite amazing. So it is a definitely worthy opponent. And what's happening now in the rise of a great power to challenging existing great power is the same sort of thing that's happened in the 1930 to 45 period. In particular, I studied the rises and declines of empires and the reserve currency, starting with the Dutch. They had the world empire, the British, the United States, and now. And through that period of time, there is what you call stealing. There has always been the taking of ideas. The British hired architects who took from the Dutch, who had the shipbuilding, and that was their main competitive advantage. It's a reality, and I think it's important to see that arc. There's an arc in which it's like competition. You might internally say somebody's stealing their ideas. Well, that's right. I mean, that's just the practicality. And in the world, you don't have the same kind of rules. It's more of a jungle. You don't have laws. I think you just have to see it for what it is and deal with it well, right? In other words, don't deal with it emotionally. Approach it like a chess game. If I make this move, it will have this implication. And so I think if it was clear, questions like, do you want to go to war? The war years, very similar to now in terms of the need for a lot of money and credit, produced an enormous amount of money and credit, but it was managed by the central bank in a way where they were de facto taking that on, and it produced it was a good example of testing the limits of that. Now, we went into periods where, what is an alternative source of wealth? And as I say, it could be stocks, gold, it could be other assets, but those became the boundaries. What would happen in terms of this limit is if something transpired where the dollar as a reserve currency, the holders outside, made another market that was a better market. It could be gold, it could be stocks, or it could be an alternative currency, like we're in the earlier session, which I listened into. China as a reserve currency. There will need to be an alternative process. When that happens, and I think it will happen, it looks like a currency defense. What I mean by currency defense is if money leaves that asset, if those who are holding bonds don't want to hold the bonds because they have lousy returns and they're printing a lot of money and they want to go to something else, and that starts to accelerate, should that happen, then what that does is as money leaves, it puts the central bank in the position of having to decide whether it buys more bonds in order to fill in that gap, or it lets interest rates rise. Well, they can't let interest rates rise. There's too much debt, and then also interest rates rising means that the asset prices all go down, and it's too vulnerable. So like all currency defenses, what it means is that they then have to accommodate that, and the act of accommodating that in and of itself is a big problem. Should that happen, that would be terrible for the United States. Earlier I heard about the discussion of the privilege. That's right, the United States dollar is a tremendous privilege, and we are certainly pushing the limits of that. And if we were to think that the dollar was to be any other currency because of us pushing the limits, if that were to happen, it would be probably the biggest disruptor, not only to the markets, but to the whole world geopolitical system. So we're in a fiat monetary system. What I mean is through history, throughout most history, there was gold. Let's say 1944, we create the Bretton Woods system linked to gold. The United States printed a lot of money and more claims on gold than there was gold. And in 1971, which wasn't very long ago, we couldn't meet those claims on gold because we had too many IOUs. So we had a devaluation. And the dollar as a world's monetary system or currency is critical. But it very much depends on the dollar, the United States competitiveness, and so on. So it's a longer term risk. As Nouriel was pointing out in the earlier session, one of the things that's been a prop for the dollar is the fact that there's a lot of dollar denominated debt. What that means, it creates a demand for dollars. That debt will either be satisfied in some fashion or another because there'll be the dollars to produce it, or that debt will be defaulted on in one way or another. That's a whole other discussion we can get into if you want. But at that point, it'll reduce the desire, the short squeeze for dollars, which will serve to weaken the dollar at the same time. And also, as we look longer term, as Nouriel was pointing out, the squeeze, the politicalization of it, changes the nature of the capital flows, because we are in a situation where you can be squeezed. And so when you start to think about, yes, if you're China and you're holding $1 trillion of treasuries, would you want to do that? Well, particularly, given the returns, given all that, and given the conflict. So this China piece is a important piece. I say there's three things. We're spending a lot of time discussing the monetary and debt cycle. The second is the what I'll call the gap, the wealth gap, and the values gap cycle, and then the third is China. So if we look at those things in combination, I think that's the best way to look at the whole picture.